Hey everyone, can you hear me okay?
Yep, sounds good. Just getting set up.
All right, perfect.
Hey, Ellie, I hear you great. I think Jared is busy doing the tech setup. As we've been doing lately, we're broadcasting live on YouTube and broadcasting live on Twitter as well, through Twitter broadcast, as well as obviously doing the space. So it takes a little bit of work to get all that to coordinate. We'll get started in a second when all that is set up.
All right, we good? Everyone's here?
We're all ready to go.
Cool. Okay. Hello and welcome to everybody listening, who are watching live and also watching the video after the fact. We're streaming across Spaces, YouTube, and Twitter broadcast, and we're going to continue experimenting with new formats in order to bring everybody the most engaging content that we can. Our objective is to push the blockchain space forward, and if you'd like to be part of that, then you can start by following us on Twitter. Today we're going to be discussing the current state of crypto and Avalanche with Ellie, the founder of Colony. Colony is a community-driven accelerator on Avalanche. They've financed many projects in the ecosystem and are the creator of the CAI index token, which acts as an active index fund and as the benchmark for the Avalanche ecosystem. So, welcome.
Hey everyone, pleasure to be here.
Yeah, we're super happy to have you. I think a lot of the events that I've heard you speak at, often you focus on Colony quite a bit, and I think you're someone with a lot of market knowledge. Like you've been in crypto for quite a bit of time, so I think it's going to be a fun opportunity to sort of like test you or question you on your thoughts about the space in general. So we're going to focus on that today quite a bit.
Yeah, looking forward to it.
So I think we can get started with maybe sort of a little game. Like if we could go back 24 months when Avalanche was still in its infancy. I think at that time the price was like around $30, heading back down to 10 before going sort of parabolic. Kind of curious if you can bring yourself back there. I know you were already active quite a bit on Avalanche. Where did you think things were sort of heading in the next 2 years? Like, and maybe relative to other competitors like Ethereum, Solana, and Polygon. There's new competitors today, but I think at that time those were like the ones that were more like thinking about. Yeah.
Yeah, for sure. Very interesting question. So if we look back like 2021, I think was around February or so when Pangolin initially launched. So that was kind of the beginning of DeFi inside on Avalanche C chain, and it pumped the AVAX price to the roof. So then we had like a slow bleed until I think it was end of August or so. And in that time frame, people started heavily building on Avalanche. People were very, very bullish on what Avalanche could achieve because the gas fees were substantially lower than ETH, and so it was like very, very interesting. And I think what really kickstarted the hope of like many people is the Avalanche Rush program, where like big guys like Harvey, Curve, and so on deployed on Avalanche. Really like all the protocols and also like all the users really like started to try Avalanche. So we had like a crazy run on the AVAX price at the end of 2021. So I would say, like, to answer your question, beginning of the year 2021, at least if I speak for myself, I was pretty bullish on Avalanche because for the past like almost 10 years that I've been in crypto, um, when working with corporates that want to do something on the blockchain, always they were choosing like Ethereum, and at some point they understood that the network effect of Ethereum would not let them properly scale their business on chain. So let's say if you take like a real estate company, if they want to tokenize their building in New York and their building in Tokyo and then do some swap between the two, if they do that on Ethereum, they'll also be, because of the network effect, sort of trapped with high fees that is potentially like make it Ethereum struggle because I don't know, like people in South Korea are playing CryptoKitties. So that was what was happening back in 2017, for example. So when I read the Avalanche paper, and I think when a lot of people start to understand the power of subnet, so essentially getting rid of this network effect, a lot of people started to be bullish on Avalanche. And then second part of the year, with all this DeFi incentive and so on, people got really bullish, and a lot of builders came to the space. So that was at that point. I think second party of the 2021 year, I thought like Avalanche had like a real shot at getting numbers close to Ethereum in like a 2 to 3 years time frame. But yeah, and then we had like the bear market and so on. But yeah, I think everyone was very bullish because of all these DeFi incentives and so on. But also in crypto, we have like different trends. So the capital flow from one chain to another. But I think Avalanche really stood up to the challenge, and we had like we had no major, I will say, issues. The chain keep on going and working smoothly. So I would say it's very like for the future, it's still looking bright, I would say.
So you said that you were expecting Avalanche to maybe reach like sort of Ethereum in 2-3 years, which is now. Obviously, we haven't, but just curious, like when you say reach Ethereum's level, do you mean in terms of like market cap or daily active users or TVL or sort of all of the above?
Yeah, sort of. I think if we look back at 2021, if we think that the market is going to stay in the same sort of like state in terms of like user utilization and so on. At the end of the day, Ethereum was very pricey. I remember doing some transaction costing like $50 up to $150. So that was crazy high. And on Avalanche, you were just like spending $1 or $2 maximum. So really, if the market had stay in this sort of like environment, Avalanche would have been like a go-to place for much longer. And so I think the user acquisition would have been easier because the selling point is just right in front of your eyes, right? So as they were building more and more tool, I think more and more users will have chosen like to go for Avalanche instead of ETH. And still to this day, like we're talking to a lot of protocols, and the fees to deploy a protocol on Ethereum compared to deploying it on Avalanche is like is huge, right? Because the gas fees are very pricey on Ethereum. But with the bear market, this sort of like difference in gas prices that you have to pay for all the transactions that you're making and for users, kind of faded. It's still, of course, more expensive on ETH, but not that more expensive. So I would say the bear market was not, it was harder for Avalanche to have that selling point, push forward in terms of gas fees and overall, potential better utilization of all the protocols.
Yeah. No, I think I had a similar sort of thought at the time. Like I remember doing the same transactions, which were like at ridiculous prices on Ethereum, and then coming to Avalanche, and it being like smoother, like a better like UX, and then being extremely cheap, and sort of going like, okay, well, this thing is definitely going to win. And when the bear market hit, it was like, oh, well, everything is going to slow down now, and users aren't going to be in a hurry to the gas prices are going to go down because there's just not that much competition for block space, right? And so I always sort of viewed like the bear market as a real negative for Avalanche. So I guess we are thinking the same on that one. I think maybe I'll let Jared. You were going to introduce some price data, and then we can talk about that.
Yeah. So I just wanted to get your take on so you kind of mentioned where you thought we were going to be, and now I'd just like to kind of get your take on where we are now. So as of today, I can hear myself. We have about 600,000 transactions on Ethereum. 600,000 daily active addresses. If you're adding in kind of like the L2s. Versus about 80,000 on Avalanche. So it's a bit lower. And then if you look at kind of like the market caps, it's like a 25 times difference. So but Ethereum has about 7.5 times the number of users. Considering it's trading at 25x the market cap. What do you think our performance is right now?
Yeah, that's a good question. I think to really get the picture, like price wise, market cap wise, people have to understand also the longevity of these two chains, right? So ETH has been live for quite some time now, and Avalanche has been live for like 2.5 years or so. So in terms of like token distribution, token vesting schedule, and so on Avalanche, there is still like a lot of AVAX that has been distributed for the past 2 years, and are still distributed this year to I think it's mainly the foundation now, but still there is an increasing circulating supply, and obviously Avalanche, they're building like a lot of tooling. They have like a huge team at Ava Labs that they need to take care of and so on. And so I think there have been some selling pressure on Avalanche that was not also witnessed on ETH, because ETH has been around for much longer, probably more decentralized in terms of number of users and so on. So yeah, I would say that I think for me this is also like a huge impact, and in a few years from now, I think we'll see like a sort of like a dilution of that impact on Avalanche, and we'll be able to properly have like a price discovery that will be be able to take place a bit better, if that makes sense.
Yeah, actually,
we
I
were
just want to add one thing. So I've been seeing that there's some work happening on subnets. There's some interesting development there. What do you think the effect of more validators coming online, having to meet that AVAX token requirement, is going to do to this kind of market cap effect on Avalanche?
So the question is, what do I think? Like, if we have more and more validators, right?
Yeah, because obviously they need to meet that like 2,000 AVAX mark, right?
Yeah, for sure. So yeah, and that will stay until there is like a governance on Avalanche, and when they launch the governance, we'll be able to lower that amount if there is a vote for it. But as of now, yeah, it works this way, and yeah, I think obviously the more people stake, the less the real circulating supply will be. So if there is like strong demand for AVAX, the price will go up, right? I think also protocols like Benki with SAVAX, like GoGoPool with GG AVAX, like also Yildiak with YY AVAX. This is great because it enables people to efficiently lock also their AVAX, so efficiently reduce the real circulating supply of AVAX, while still enabling people to do some cool stuff in DeFi and really like power the entire DeFi ecosystem on Avalanche.
Hey, so as Jared was saying, the fully diluted market cap for Ethereum today is 223 billion versus 9 billion for Avalanche, which is a 25x, sort of like roughly 25x difference. And whereas the number of users is only a 7.5x difference. But we had a pre-call to plan this event, and what I was saying on a pre-call is, to me, this sort of makes sense. Like I think you should have a risk premium to buy Avalanche because it's a much smaller player, so it's riskier. And sort of my personal feeling is that at this price relative to Ethereum, if we're sort of like you're paying 4 times less per daily active user. This feels like the right kind of discount, and it feels to me like Avalanche is priced semi-correctly, just on this sort of like one metric. And I don't mean price correctly in terms of like the actual price, because so like if the whole space goes down, it's hard to put a number price on it, but I think it's pretty easy to put a relative valuation on Avalanche versus something like Ethereum. You could say like, oh yeah, I mean like per user or per this, it should be trading at X number less, and to me 4 times less seems sort of like in the range. Do you have a view on that? Like, do you agree, disagree, or sort of like see a difference?
Yeah, I mean it makes, like if we take like the comparable analysis, it makes sense. I think everything that you just explained. But then there is also like who is truly using Ripple or Cardano. How are you able to properly back the valuation of like big projects that don't really have like a huge DeFi ecosystem. It's pretty hard, and it also depends on how like the token are held by which actor, by like staking composition and so on, as you mentioned. But yeah, overall, I agree. I agree. I think for Avalanche, what would be very interesting is to see how it plays out with users, like people in this space, for example, that are using the C chain, interacting with DeFi and new cool protocols, but also users of Avalanche that are on subnets and they don't really know that they're using Avalanche as a tech, underneath. I think it would be very interesting to see how it truly plays out in terms of AVAX adoption and AVAX price. I think that's a very interesting topic, like how like potentially like institutional adoption will drive demand for AVAX and then benefit people that are using the C chain for DeFi. Because as of now, if you look at the KKR tokenization part, I think it's an amazing partnership, and it really shows that Avalanche is able to make great partnership and that they have good relationship in Wall Street and so on. But if you look at the everyday Avalanche user on the C chain, I don't think most of them can really like participate in being able to trade these tokenized share, because there's like KYC requirements. I don't remember, but I think you need to have 2 or 5 million to be able to participate in this tokenization process. So yeah, what will be very interesting is to truly see how this subnet economy is going to empower Avalanche users. And when I say, for me, Avalanche users, is really like people on the C chain, because we've seen some numbers of Avalanche usage as a platform, which is amazing. But what is truly happening, for like the folks listening to Twitter, like people on Twitter and so on, people playing around with Avalanche protocols, they might feel that the numbers are a bit different because they relate way more on C chain data than anything else. So I'm talking too much, but basically, to answer your question, for this valuation, are you only looking at active users on the C chain, or do you look at also, like subnet expansions and so on?
Yeah, I think a lot of those numbers are like it's actually hard to know what you're looking at exactly. I think the space in general needs to do more work on having clear data that is comparable across chains. I mean, we spent like a couple hours on this morning, and it's really difficult actually to match specific data points because some of them only cover the C chain, and you're like, no, I want the whole ecosystem, and so on. But I'd actually like to shift gear, but in the same vein that you're discussing. So, like 6 months ago or 9 months ago, when I used to think about Avalanche, I was thinking DeFi, NFTs, and gaming, and I added a fourth category around that time, which is what you're referring to. So institutional subnets. This is sort of how I categorize the different markets that could grow for Avalanche. And I'm just curious, do you break it down the same way, or do you have a different view?
Yeah, I mean, DeFi, institutional subnets, NFT, gaming makes sense, I would say. Institutional subnets, to link it with what I was earlier, like saying, I think with AWM we'll also see, once there's like true compatibility with the EVM on the C chain, we'll also see like how can protocol on the C chain can leverage like the subnet expansion from the institutional side. For example, at Colony, one thing that would be amazing for us is to be able to get some users on these subnets from the KYC perspective, for example. Like as of now, we'll have to pay for everyone that is doing KYC on our platform. We'll have to pay for them to go through KYC. And when you have thousands and tens of thousands of users, it starts to be a bit pricey. But if we could somehow query another subnet data related to one single address, if that address is KYC or not, that could be great. And I heard like things about KYC subnet and so on. That would actually be amazing if like protocol on the C chain can start leveraging other infrastructure or like like regulatory process like the KYC on other subnets. So that would be very cool. And I think with all the regulatory framework that is getting into crypto now, that would be truly awesome for the development of a lot of protocols on the C chain. So I think that's an interesting development. And I think some people at Ava Labs are yet to truly, like understand and go deep into that, because I think there is a lot of potential integration that protocol on the C chain could do with, institutional players. And institutional players, I think they will also potentially be very interested in learning how some of the DeFi protocols are working and maybe using part of it. And, I think there could be like deals that could be done around all this. So I'm pretty bullish on all these like institutional subnets. In terms of gaming, that's obviously like a huge narrative as well. but a narrative that is played by a lot of people. So I think, and when I say a lot of people, it's a lot of chains, right? So there's a very strong competition there. For the institutional subnet side, I think Avalanche has like a clearly, as a company, is well suited to pursue this and really be able to get like a strong results. For the gaming side, as of now, they've been doing like great progress. But there is like so with Colony, for example, we funded few gaming GameFi deals. It's really like a tough business because it to build a game you need like a lot of people. Then you need a lot of marketing. So it's not by raising 2 to 5 million that you will be able to truly build like a very good game with Web3 integration, with a good marketing to be able to grow your user base. If you don't raise a lot of capital, it's really complicated. And if you look at games that are always pushed forward on Avalanche, Shrapnel, for example, they raise like huge amount of capital. So I think they probably will be able to make it. But a lot of other projects, they raise too little, and they're getting shot on a runway right now. So I think that can be pretty tough. So GameFi, I think there is a lot of tooling that needs to be developed. I think we're going into the right direction, but yeah, the competition is very tough. And DeFi, we already talked about it. And NFT, it's not my specialty, so I'll leave that to others to discuss.
Which has there been like areas of development in the DeFi space on Avalanche that have like really impressed you? So like for me, when I look at like the DEX market on Avalanche, I'm always sort of like pleasantly surprised. Like we have like a Club, we have a FX, which is Enclave Markets. We have Trader Joe doing liquidity book. We have Platypus, reinventing Curve. So like sort of like a super active competitive area. Is there any area that you look at and where you've been like impressed with the innovation on Avalanche DeFi specifically?
Yeah, I mean, like concentrated liquidity is, I think it's great because at the end of the day, you can interact with it like in different ways. Limit orders are coming, so I think it's very easy for users to use. They are getting more and more options to also interact with these new concepts, and I think like everything like option related will be able to be built on top of these like concentrated liquidity protocols. So that's great. The Uni v3 license is expiring now, so I think we'll see more and more of these protocols. So yeah, I really like, for example, Stakeout, what they are doing with like liquidity management on top of this concentrated liquidity protocol to make sure that the community can truly interact with and truly provide liquidity to these protocols. That's something that I've been following kind of closely. Yeah, and obviously, like on the exchange side, it's really like really important to be able to keep innovating because it's how people mainly interact with DeFi. You need to make sure you have like a low slippage, and because overall with this concentrated liquidity, with less liquidity, you can have less slippage than you had on Uni v2 models. So I think that's really empowering for DeFi overall.
Cool. And do you think there's anything missing in the DeFi ecosystem on Avalanche?
Good question. Yeah, I will say something is missing for sure is the ability to have a liquid primary market, but that's what Colony is building right now, so that won't be missing for long. But obviously, I'm biased there. I think what Delta Prime recently launched is amazing, and I think a lot of things could be built in the same model with like the prime account, like under collateralized lending. Yeah, I think that's really interesting. Yeah.
Oh, sorry. I think I just asked a question with my mic off. Is that right?
Yeah, you made it.
Okay,
Just
so let me
take
start
over.
over. So, sorry about that. Yeah, so as I was saying in private, I know that you're mainly focused on Avalanche, but curious if you have been keeping up with like the progress of other chains, and if there's other chains that you're like particularly impressed with.
Yeah, for sure. So we are trying to at Colony, like we're trying to stay aware of what is being built on other chains. Also because we want to make sure what we're building is not already being built on other chains, and if they are building some things comparable, we want to make sure to see how we compare to them. So yeah, we've been keeping track. That being said, we are still very very focused on Avalanche because crypto is so vast. If you start to do and interact with each of these chains, you are not able to truly keep track of what's happening on Avalanche. And with Colony, we have like kind of a big job because we are doing some sort of like VC work because we invest in projects, and investing in projects is doing like due diligence. Then when we invest, we help these teams to move forward, to understand some deals and so on. So for example, before this call, I was explaining to a team like market makers, sort of like option strike and so on, just for them to understand because they're just tech guys and they don't know this stuff. So we try to help people that are building on Avalanche as much as possible. So yeah, it's tough to follow everything that is happening elsewhere, but we try to do our best to keep up with other chains as well.
And are there any like specific? I don't want to press you too hard on this question, but are there specific like chains where maybe they have like a specific area where you're like, oh well, Arbitrum's been doing like really great on DeFi, and this is the reason, or like have you learned anything in the past 6 months looking at other chains? Do you have any points of views to share on this?
Yeah, for sure. Yeah, sorry. So on this, I think Arbitrum obviously was like a great chain to interact with for the past year or so, even more. I think that faded a bit away with the airdrop, but still, I think like I mentioned earlier, like in crypto, people are chasing always the new thing, where there is like incentives and so on. So yeah, Arbitrum was great. No, we'll see. There is like the L2 on BNB. We'll see how it goes. There is ZK on EVM on ETH. So yeah, I'm not particularly like impressed with anything that I see right now, but I think I'm missing a lot. We see like we review like a lot of decks, so we've seen like NFT tokenizations. There is a lot going on. But even on ETH, for example, like what I like is, but I already mentioned it. It's like people building option protocols on top of concentrated liquidity. I think that's really nice, and that will really like unlock, I think, even more liquidity in these protocols.
Yeah, I've always wanted to have more sort of option protocols in DeFi. It's one of the topics that I like to talk about. So, but just going back to something we were discussing at the beginning, when we were going back into the past and talking about, okay, so 2 years ago, you used to go on Ethereum and do a transaction, and we, just bad UX, and Obviously, not pleasant from a pricing perspective, especially if you have to do multiple transactions. And then there's this great bridge to Avalanche, and Avalanche is working well. And the UX is great, and not perfect, but very good. And if the bull market continues, I think you're going to see a lot of people move over, and that didn't happen, right? And the bull market didn't continue, and the prices came down, like we said. And during this time, you had L2s come up, so you have Optimism and Arbitrum, which are perhaps centralized for the time being, but you will get cheap transaction fees, and the UX is not too bad. There's some technical shortcomings to those chains in terms of like settlement, but there's ways around that, and there is like a lot of innovation happening on those chains at all. So we face, but the question being, do you think we're heading towards a multi-chain world, and how do you see that playing out? If so?
Yeah, so I definitely think we're already in a multi-chain future, right? I mean, we have like a lot of chains now. I know L2s, there is like L3s built on top of them. So a lot of chain already available, right? I think, and why Avalanche has like really like a shot at this is how do you make sure all these chains are able to communicate with each others, and I think on Avalanche, that's also like one of the good value proposition with AWM is that subnet will be able to talk to each others, and so I think that's really powerful. No, one of the problem of the multi-chain future is also how do you make sure you're able to acquire users from other chains, right? So, and I think what we've seen is at first in crypto, people were talking about a lot of Bitcoin maximalists, and now you have ETH maxis, and I think Avalanche. There is some Avalanche maxis as well, but like sometimes people take positions, and there is I know because I met some founders, they don't want to launch on Avalanche because, well, things have been said by some leadership, and they don't want to launch there because their friends on ETH are not a big fan of Avalanche, which is like purely like psychology or whatever, and has nothing to do with like the tech underneath. So I think people also get attached like to different chains, and regardless of how good the tech is, or what you build to make sure the users have like a great experience, people will also stick with some choices. So yeah, it will be multi-chain, but I think it will be also tough for some chains to make sure they're able to attract liquidity and users. For Arbitrum, it's pretty easy because they're using ETH, right, for gas fees and so on. So people that are Ethereum maxis, it's very easy for them to go on Arbitrum and interact, and there is so much liquidity on ETH, then it was easy to bridge that over to Arbitrum. I mean, easy, not that easy, obviously, but it was more natural, I think, for people on Ethereum to go to Arbitrum. For Avalanche, I think it's a bit different. But I think eventually we'll go there. I mean, for example, with BTC.B, we had great adoption. So yeah, I think that's possible. And obviously, the future is multi-chain. Each chain will just have to make sure they're able to attract as much users as possible. And the Rush program was a great play, I think. And we'll see what Avalanche is doing with the foundation. But I think there is way more that can be done on Avalanche right now. I mean, quick example. Earlier this year, Colony provided $1 million in TVL to Delta Prime. We were the first to provide liquidity to the protocol, And if there is no lender of liquidity, obviously the protocol cannot function, right? So on day one, we provided 1 million, and then people were able to borrow against that. And after a week or two, not much lending power was added to ours, but it quickly bootstrapped the ability to people to borrow. What we did, and so I think, and it's not coming from me, but from the Delta Prime team, they told us that the help coming from Colony was greatly appreciated and really helped bootstrap the protocol to really achieve this incredible growth. I think they reached more than 20 million TVL about a month ago or so in the bear market. So I think Avalanche, with the foundation or so, I don't want to overstep here because it's not my business, but at the end of the day, they could do more as well to a bit like what they did with the Rush program, but focus on DeFi. They could do more to properly help these protocols. At the end of the day, it's if we look at the deal that we made with Colony, we're getting the yield. We have like a special deal with tokens that everything will go back to our community. So everyone benefits from this, and the Avalanche Foundation could do something similar, and that could really help a lot of protocols. Right? You do like an incentive program for like 6 months, and then you roll that over to like a new protocol. So the kind of thing that would really help DeFi on Avalanche move forward, and also help builders to choose Avalanche, because let's face it, like builders, when they want to launch a new protocol, they are also asking themselves, okay, what are the costs to operate that protocol on that chain in terms of gas fees and so on, as we discussed, but they're also asking themselves, do I get like a proper backing on this? And I don't think like just a few tweets are what we can call like backing. And I think capital is really important. And so yeah, that's a long answer, I guess.
Yeah, it's actually, I think that's a pretty good point. It would be nice to see some sort of like alternative to the Rush program, to see like the foundation actually helping like new sort of projects starting up, to give them some liquidity. That would actually be potentially a good idea, although I feel like it would be a little bit political, because there'd be maybe some fighting over that liquidity. But I think it's a good opportunity to kind of segue into talking more specifically about Colony. And just gonna, I'm noticing that you guys have a lot sort of going on at the moment. Can you just give us like an overview of the most important events that have been going on over the past few months, maybe up to a year, and also what kind of things you have sort of in the pipeline, what else is coming up?
Yeah, for sure. So we've been pretty busy. As I mentioned, we are trying to do kind of two jobs. So the first one is being a VC, invest in different deals. So we invest in seed, private sales, and then we claim on this vesting contract when this project go live, and we airdrop this token to our staking contract. So we've been doing that for close to 2 years now, and obviously it has been very challenging, because Colony was born at the top of the bull market. So we made investments, but these investments also went down, and so doing these airdrops, the value of this airdrop decreased over time, just like alongside the rest of the market. But yeah, we've been doing that work, which is pretty tough, because it's a lot of work to review each project. So we have a dedicated team internally, but we have to go through like all the paperwork, the deck, and so on. Then we have to make sure that if we invest, we help these teams. So doing everything marketing related. We have to make AMAs, we have to write articles, and so on. So that's a lot of work. And another thing that we've been doing as well is provide liquidity. So we provided $5 million liquidity to Yeti Finance. provided $1 million to Delta Prime earlier this year. We recently provided $100,000 to Steadify, and we also provided, liquidity to other protocols in the past. So that's also some work, right? Because when we provide liquidity, we want to make sure things are done, properly. So meaning we meet all these teams, then we review their contracts, review their audits, we audit the contracts ourselves to make sure we are not risking capital. At least we are mitigating that risk. So that's sort of like VC hedge fund type of business that we've been conducting. And at the end of the day, all the rewards, everything goes back to the staking contract, which helps like Colony's community to get a good APY on their CLY stacked. Another thing that we've been doing is DCAing on AVAX with our large treasury, and we'll be able to update the community in the coming month on how well we were able to accumulate AVAX. And obviously, most of our work is related to development. So we made a partnership with another team called Future Finance. We built Kai, which is a on-chain yield-bearing index, the largest on Avalanche. We reached $1 million TVL recently on this. And we hope that, once again, with concentrated liquidity, we'll be able to add more and more assets on that index. As of now, the liquidity on Avalanche is pretty low, so it's pretty hard for us to add other assets to the index. We have like a $2 million liquidity requirement for each of the constituents assets to make sure that then we can integrate Kai into other protocols. So we just want to make sure it's liquid in terms of liquidation procedures, for example. And what we've been really like spending most of our time is building a Colony early stage feature, and that has been a lot of work. So we basically built from scratch a feature that enables people to invest in seed and private sales themselves with their own capital, and then trade their capacity to claim on the vesting contracts of this project, to give them the opportunity to trade that on a Colony decentralized exchange. So essentially, people will be able to see on Colony, every people that are staking CLY will be able to see the entire deal flow on Avalanche. So projects owner will be able to register their project on our app. Everything is on chain, so all the information is still on chain. And so it's really, really transparent and highly scalable. You don't need Colony's team to review everything. The community can easily engage with this project. They can like this project. They can comment these projects. If there is enough interaction with all these projects, what they can do is start to commit N token. So for each CLY that you stake, you get 100 N token. So then you can commit this N token to different projects. And the really cool thing is you can then register your interest to, at a later stage, commit USDC to this project for their fundraising campaign. So that's what we've been building. Once these projects have like a lot of interest from the community and that they started to receive some ENS token on the smart contracts, we move this project to the second phase, which is analysis. And on that second phase, people can then commit USDC. So the more N token you committed, the more USDC you're able to commit, which means that the more CLY you stake, the more USDC you're able to invest in projects, essentially. So that will really, I think, also back the utility of CLY. And so a project will have, for example, like a $200,000 raise target. The community can undershoot or overshoot that raise target. And then there is like the investment committee. Again, all of that is happening on chain. At the investment committee, the project there is a deal that is made with the project. If they want just to raise the raise target, or if the colony overshoot the raise targets, we're able to invest more in that project. Once the project wants to get back this USDC that has been raised by the committee, they need to send the project token to that fundraising contract that we call Nest. And essentially, in the same transaction, they send their they send their project token and they receive the USDC in the same transaction. And then Colony, what we do is, based on the project vesting schedule, we create a vesting contract, and we lock all of these tokens in that vesting contract. And we issue one-to-one a derivative token that we call CE token, for Colony Early Token, that represents all these tokens that are locked inside the vesting contract. And then we distribute all of these derivative tokens to people that participated in the sale. And these people are then incentivized to provide liquidity on our DEX, and making, therefore, CE token liquid against AVAX. So it's it's kind of like a big feature, and it really enables people to invest in seed deals and then trade the representation of the capacity to claim on the vesting contract on an AMM that is managed by Colony. So essentially, we're making the primary market liquid, transparent, and we are the first protocol to have built something like that in crypto. So we are going to release that pretty soon, and we are undergoing our 4th audit on this. And so far, we have like a great feedback from Paladin. So yeah.
Hey, that's honestly really impressive. It's a lot to be building so rapidly. And I think it's like these are very valuable tools for this ecosystem that no one else is frankly building, as far as I can tell. So yeah, congrats on that. Curious.
Thank you.
How has your vision sort of like for Colony evolved and developed over time, and how was what was your experience building it like? Curious if you've made any huge mistakes that you've learned from, or if you've had like major insights. I imagine you have.
Yeah, for sure. So with Colony, initially the idea was pretty kind of simple, and the idea was very cool, is to raise capital, sort of like create this sort of like small fund, invest in projects on behalf of the community, and then let the community choose and invest that capital to different projects, and then so in seed deals, and then distribute all the tokens to our vesting contract. So that's what we've been doing so far. And obviously from day one, the community knew, we knew, investors knew that this was not a sustainable approach, because obviously you invest capital and then you then distribute all this token to the staking contract. So at some point you have no capital left, and you distributed everything back to the community. And so the project has to basically stop, which could have been fine, right? But it will also mean that the CLY token will have no value anymore when we don't have any more capital to deploy, because our APY on the staking contract will basically go to zero. So from day one, I told investors that's the first version, and we will build like a second version that will enable the community to invest directly. So that was a pretty bold statement, because how do you make sure the community is able to invest in a seed deal? Do you make them sign a SAFT, which is a simple agreement for future token? There is a lot of legal issues. Also from a like user sort of like behavior in crypto, people when they invest in something, the community likes to have like liquidity right after it. So this is why, you know, like IDO platform are so popular, because you invest in a project and then the project is live maybe like a week after. So it's fine and you have the liquidity kind of quickly. So the community see value in that. But when you invest in like a seed, potentially the product is not going to be liquid for like a year, maybe two, maybe it will be much quicker, like 6 months. But how do you make sure you are able to engage a community around this when there is no liquidity event, you know, soon enough? So back then it was a pretty bold statement. We worked with the team from scratch to really try to find like a way to make it work, and we basically came up after, you know, like a long thinking process, and to this like liquid vesting feature that I presented earlier, that truly enables the community to get liquidity after they invested in these seed deals, while still maintaining a very strong sort of like regulatory compliance, because when this feature is going to go live, we're going to ask users that want to use it to be KYC'd, to properly use it. I can't reveal too much, but we also have on-chain signing messages that are legally binding, that truly link all these investors to the project owner. So that's something that we've been building as well with our lawyers. So truly like a lot of work behind the scenes, and we twisted the model quite a few times to make sure like it could work properly at the end. But yeah, it was a long process, and you know, when you're building technology, it always takes more time than you initially anticipated. For example, for our DEX, it's a pretty simple AMM fork, but we wanted to make sure users have a great experience, and we wanted to make sure after the fundraising process, when the people start trading CE tokens, they are able to provide also liquidity with their CE token and their AVAX at the right price. And you know, during our QA process, the engineers told us that it was like we had like a risk here of people providing liquidity in not the right prices, and that could lead for like the community to use, you know, quite a lot of value on their investments and so on. So we had to make sure we create on-chain an automated process to initially bootstrap the liquidity pool at the right price that was indicated during the fundraising process. So you know, like this is the kind of stuff that you also figure out as you build. So yeah, we had quite a bit of a challenge to build all of this.
Can you talk a little bit? Just because I'm kind of curious about your decision-making process. Like, how do you come to the conclusion that you're going to, you know, let's say, put some liquidity into a project? How do you talk to projects? What is kind of like the internal decision-making process that you have going on?
Yeah, sure. So it's like specifically when we provide liquidity, so the decision process is pretty straightforward. So we meet with the team, we present them like a potential deal, and if they agree to that deal, usually we want to make sure that the deal is good for our community. That is, we have like a close to 8,000 people staking CLY. So when we make a deal and redistribute value back to the staking contract, we just want to make sure that that value is high enough just for our community to not just receive like dust, basically. So we try our best to, you know, have like the best deal on the table for the community. So if we can come to an agreement that works well for Colony and the project, then we move to the second phase, which is reviewing their audit documentation. And after that, we basically audit their code ourselves. I mean, we don't properly audit it, but we run our own due diligence on their code base, basically. And if that goes well, we then agree to like a timeline to provide the liquidity. We sign a contract and so on, and then there is like the entire marketing process. The team at Colony makes sure that we're able to support the project with like potential like writing articles, maybe doing like a Twitter space, and then interacting on Twitter with these projects and on Telegram and so on, and make sure our community is able to understand why we do that and why they should potentially also interact with this protocol to maximize the value that they can extract out of it. And yeah.
Okay. I'm also curious about the process that you kind of have in mind for how you want to switch over to a DAO, because I noticed that it said that you have a plan to transition into being a DAO at some point. I'm just curious about how you expect that transition to go, and I'm also just kind of wondering how you expect the process of becoming a DAO to sort of change the sort of regular operations of how it goes. Because I would just say that it seems like so far some of the decisions that you've taken have seemed like pretty good decisions coming from the point of view of like, especially decisions taken by like sort of like a financial professional sort of people. Do you also just sort of adding on to my first question about the DAO, do you expect there to be some challenges with sort of opening that up? Like if there were some people who wanted to, maybe take advantage of the DAO model to do, maybe some underhanded things, or maybe if it's just not always a great idea to open up, like anybody can vote on whatever they want,
Hey, just a second before you answer, Ellie. I just want to, we're hitting the 1 hour mark, so I'd like to invite anyone who wants to ask any questions to put up your hand. And while Ellie addresses this question, we'll bring you up after. And if there are no questions, we'll close it down after this. If that's okay with everyone. Thank you.
Yeah. So regarding the downside of things, so obviously we've seen quite a few problems in terms of DAO governance for the past, I think, 2 to 3 years now. But let me maybe tell you a bit more about like how Colony experience with its community, like the DAO governance kind of process. So initially, we were to deploy capital. When we did the fundraising, and then when we launched Colony, a lot of community members started to expect us to deploy everything kind of at once or so. So they wanted us to buy like a lot of AVAX. I remember like back in January 2022. And we were like in a tough position because obviously, Colony is the team behind it. We are here for the long run. So, we have like very long vesting schedule. The team doesn't still have like any CLY token unlocked, and we've been building for like 2 years now. So we really take like the long-term approach here. I wanted to make sure that with the treasury, we are cautious enough. And to be frank, like most of the team member went through the 2018 bear market, and anyone that went through this don't want to go through it again. And unfortunately, a lot of people went through it again back in last year. So we basically told the community that we wanted to have like a long-term approach, and we wanted to preserve capital, and that we were going to keep like a large part of the treasury in USDC. And I think at first, like the community kind of struggled to understand that, and we were not ready yet to have like a DAO sort of like governance with like the voting system and so on, because we were already like pretty packed in terms of like our backlog and things that we had to build. but 6 months after that, the discussion was way more easier, way more easy with the community, because like people understood, okay, so that was like a bad call to invest in AVAX, and so we're glad that the team wanted to like preserve capital and that they had like this long-term approach. So we had like community members starting to say, hey, we don't want to have like a DAO at all, because, well, basically, if we had like a DAO 6 months ago, the treasury would have been, kind of destroyed. So we had like more and more people saying that. And so that was, kind of like very interesting. And still to this day, we have like people, coming to us and telling us, hey, are you still transitioning to the DAO? They ask that in a chat, and then people are saying, no, please, no, don't do that. We don't want to lose the entire capital the entire treasury of Colony. So the vision is, with the liquid vesting feature and early stage, people will now be able to invest directly their own capital inside like seed and private sales on a lot of projects on Avalanche. And basically, they will be the one deciding where to invest, right? And they will be the one doing their due diligence on these projects. There will be like a scoring system as well inside of Colony. So each community member that want to participate in a deal or not, they will be able to rate these projects, and they'll also see like the community rating. So then it's kind of up to everyone or anyone to really like invest in projects. So in that sense, you could argue that this is like already like a decentralized autonomous organization, kind of, because you can decide to invest your own capital, and everything is decentralized. It's totally automated, and you are able to do that because you're part of the community, right? So that's kind of the vision that we have right now for like a DAO. It's like you can participate in Colony, you can put your own capital on the table, and you benefit from the entire presence and force of Colony to be able to be part of these deals. So in that sense, it will be like an investment DAO for sure. In terms of, do we want to have a DAO that controls the treasury of Colony? I think that might be a topic for later. First, we want to launch the early stage feature, and most of the treasury of Colony will soon be on chain, and people will be able to track that properly, and a lot of it will be used for AVAX rewards. So I don't think with the new model of Colony, with the early stage feature, people will ask for like a DAO on the treasury, because they will already like have like a strong voting power through CLY and their USDC on each of the deals that come to the platform. So yeah, Colony is clearly going to be like an investment DAO that is very, very inclusive. So yeah, that's my answer.
Cool. Well said.
It's great.
I'd say just, always have to be careful of the degens, right?
Yeah.
So I think we've come to a good spot. We've been going for a little bit over an hour. Probably about time to close up this conversation. Really quickly, I'll just say to anybody listening, pretty please leave us a like on the space itself. It helps us a lot. Kind of helps us get our, kind of get into the algorithm, gets us seen a bit more. Also, thank you, Ellie, for sharing your thoughts and perspective. We really appreciate your point of view on all this stuff. You're kind of like a really good point of reference for all this information.
Thanks for
everybody listening, just leave us a like and follow us on Twitter. We're gonna keep doing this week to week. So
yeah, thanks for coming.
Thanks a lot, Ellie.
Thank you, guys. Really appreciate to be able to speak with you. It was great.
Yeah.
Thank you all.
Thanks.
Thank you. Awesome.
Bye.